Alright guys, in this video we're going to cover a company called Cidara Therapeutics, ticker symbol CDTX. Now before I start this video, I just want to say a disclaimer, I do not own a position in this company yet, but first thing Monday morning I will start my position because this company, from everything that I've looked at, is ready to take off. Now, if you find any value in this video, please don't forget to hit that like and subscribe button. By the end of this video, you're going to know exactly who they are, what they do, and where they are going. And at the end of the video, we will analyze the chart to try and figure out where our support and resistances are. So stay tuned and let's get going. So every company needs a strong, knowledgeable, smart leader. Good thing for Cidara Therapeutics, they have one in Jeffrey Stein. Now, in an effort to make this video as short as possible so I don't lose your interest and focus, I'm not going to go over the complete pedigree of Dr. Jeffrey Stein, but what I will mention are a few key points. Number one, he's been with Cidara Therapeutics since January of 2014. Prior to joining Cidara Therapeutics, he was the CEO of Trias Therapeutics from 2007 until they were acquired by Cubist Pharmaceuticals in September of 2013. Now, before that, he was the co-founder and chief scientific officer of Quarex Pharmaceuticals, which was also acquired by Pfizer Pharmaceuticals in 2005. So as you can see, Dr. Jeffrey Stein is the perfect person to be leading this company. He's knowledgeable and he's experienced. Now, Dr. Taylor Sanderson is the chief medical officer for Cidara, and he has been with the company since October of 2015. He has extensive experience in anti-infective clinical trials and drug development in both academia and industry. Now, he was also a senior medical director at Merck, and prior to that, he had the same position at Cubist Pharmaceuticals. He has also worked at Trias Therapeutics and Novartis Diagnostics. So again, this is a perfect person to have as a chief medical officer for Cidara Therapeutics. So their balance sheet isn't all that impressive. As of September 30th, they have $53.1 million cash, and the quarterly cash burn is right around $20 million. So for quarter 4 of 22 and quarter 1 of 23, that'll total $40 million, which would leave them about $13.1 million in the bank. But they have a PDUFA date coming up March 22nd, 2023 for their drug rezafungin. Hopefully they'll get the approval on that, which will come with more milestone payments, which will definitely strengthen their balance sheet. Now, it's always nice when you have a company that has backing by big pharma, and thankfully Cidara has 3 agreements in place with 3 separate companies. So Cidara and Janssen Pharmaceuticals have a worldwide license and collaboration agreement to develop and commercialize drug FC conjugates for the prevention of seasonal and pandemic influenza. Cidara and Mundipharma have a strategic partnership to develop and commercialize rezafungin for the treatment and prevention of invasive fungal disease in all markets outside of the US and Japan, which are retained by Cidara. Cidara and Melinta Therapeutics have a license agreement under which Cidara has granted Melinta an exclusive license to commercialize rezafungin in the US. Melinta provides innovative therapies to people impacted by acute and life-threatening illnesses. So as you can see, we have 2 large pharmaceutical companies that want the rights to rezafungin, which hasn't even been approved by the FDA yet. That's not scheduled, as I have said, until March 22nd. One retains the rights inside the United States, and one has the rights for all markets outside of the United States, excluding Japan. Cidara will exclusively hold on to those rights in Japan for rezafungin. Now, what exactly is rezafungin? Rezafungin is a novel once-weekly antifungal being developed for the treatment and prevention of serious fungal infections. Rezafungin's high plasma exposure and extended half-life allows for front-loaded once-weekly intravenous dosing. This confers a significant advantage for patients and physicians. With this benefit, rezafungin has the potential to 1. Provide superior clearance, 2. Treat invasive diseases and less susceptible pathogens by achieving high drug exposures in humans, 3. Be the echinocandin to facilitate shorter and less costly hospital stays, and 4. Be the only echinocandin to provide more cost-effective and compliant outpatient echinocandin therapy. To date, data demonstrates that rezafungin has potent antifungal antifungal activity against representative strains of Candida, Aspergillus, pneumocystis, and dermatophytes. In addition, rezafungin has potent activity against fungal pathogens designated as urgent and serious threats by the CDC. In the United States, the FDA has granted rezafungin the following designations. For the treatment of candidemia and invasive candidiasis, rezafungin has designations for Qualified Infectious Disease Product, or QIDP, Fast Track, and Orphan Drug. QIDP and Orphan Drug designations together provide a total of 12 years of marketing exclusivity in the United States from the time of FDA approval. For the prophylactic use in patients undergoing allogenic blood and marrow transplants, rezafungin has designations for QIDP and Fast Track. The QIDP designation provides a total of 5 years of marketing exclusivity in the United States from the time of FDA approval. So I wasn't entirely sure how large the actual market was for fungal infections, or actually how serious fungal infections could be. So I dove in and researched a little bit about it. And to my surprise, fungal infections cost healthcare physicians and payers and individual patients over $37 billion a year. Most treatments that are available right now are starting to become less and less effective against these fungal infections. So now on July 27, 2022, Cidara released a press release that stated that they submitted their NDA for rezafungin and announced a license agreement with Cidara Therapeutics for the commercialization of rezafungin in the United States. Under that licensing agreement, Cidara will receive up to $460 million with an upfront cash payment of $30 million, $60 million in regulatory milestones, and up to $370 million in commercial milestones, plus tiered low double digits to mid-teen royalties on net sales. On September 20th, 2022, Cidara Therapeutics announced FDA acceptance for a priority review of their new drug application for rezafungin for the treatment of candidemia and invasive candidiasis. On October 4th, 2022, Cidara Therapeutics received an $11.1 million milestone payment from Mundi Pharma. The milestone payment triggered by the European Medicines Agency acceptance of marketing authorization application for rezafungin. The company is eligible to receive up to an additional $108 million milestones from multiple existing partnerships based on successful completion of activities planned for the next 2 years. So rezafungin's data did have to go through an FDA advisory committee. The outcome of that committee meeting was a 14-1 vote in favor of approval for rezafungin. The PDUFA date still stands as March 22nd, 2023. So I don't want to make this video too long and go over their entire pipeline, but I encourage you to check it out. They have a CD388 in there, which is a once-a-year treatment for seasonal influenza on their proprietary Cloudbreak technology. They do have a patent on it. I encourage you to go look at it and check it out. But the point of this video was to go over rezafungin, which is going to show you that it can bring millions, hundreds of millions of dollars to this company. We have two large pharmaceutical companies that have licenses to it, one in the United States and one outside of the United States, while Cidara holds on to the rights in Japan. That is going to bring hundreds and hundreds of millions of dollars to Cidara from milestone payments and royalties for the sales of rezafungin. If you can get into this stock right now at this base price, although I know it is trading near its 52-week high, it's still a very low price. The overall market cap on this stock is still just around $100 million. They stand to make that by the end of this year with royalty payments and milestone payments. So they are literally going to be trading under cash value. So here is a 3-year, 1-week chart that I have pulled up for Cidara Therapeutics. And as you can see, I had drawn my trend line already. And the trend was broken back in December of 2022, where a new trend had started. So if we zoom in here, let's go to a 3-month, 1-day chart. You can see it's making a nice climb. Let's zoom in just a little bit more the past 2 weeks, and here's where we stand right now. So the volume has been picking up. If you look, the volume really spiked back in January. That's when they released those press releases, and the volume it faded a little bit, but not too much. But as you can see here, what I wanted to show you was the trend that it's going up. And now what I would recommend, and you could do whatever you want to do. I'm not a financial advisor and I'm not a professional stockbroker, But if I were to get in here and if I wasn't going long and I was only going for a swing trade, I would jump in Monday morning. I would have a stop loss placed right around $1.45. And then if it broke through $1.45, I'd be looking for it to get back down to around $1.38. The upside potential on this thing, I couldn't even really tell you. I know there's analyst price targets that got it at 5, it got it at 3. But it all depends on what they plan on doing. I know they had a vote out in December for a reverse stock split, but that was only because they were trading underneath $1 and at risk of being delisted. But they have been trading above $1 now for 8 days. They just need to get by two more days above $1, and then they'll be safe from being delisted. But the milestone and the royalty payments are really going to be a curveball here, because they do stand to make like $500 million with right now they're trading right around 100 million market cap. So if they're going to be well underneath cash value, I would really say to be safe and conservative, I would say somewhere around $4.50, $5 is where I'd be looking to get this stock price by the end of the summer, maybe even sooner. You're going to see a little spike on the FDA approval. Most people sell the news, so you just got to watch out for that. And like I said, if once it breaks above, if you put your tools into place, like your trailing stop loss, then you'll be able to lock in those profits. But this is a stock that I would definitely be looking to go long term on. Going long for long term, you could swing trade, but always keep your core position, because there's a couple things going on. They have a proprietary technology, like I said, for the CD388. You want to go over there and check out their pipeline. It looks pretty promising. This company is way undervalued as it sits right now. I do not see anything going wrong with the approval process. They had a 14-1 vote in favor of approval with their AdCom, and I really think that there's great things going to come from this. When I always look at a company, I always look at the management, and the management really impressed me with this company. The CEO has been part of 2 acquisitions already. One company he co-founded, so he's not a stranger to this whole process. I really believe that this company is going to go somewhere. Hey, don't forget, if you like this video, if you found any value in it, hit that like button, hit that subscribe button. Feel free to leave a comment, share it. Until the next time, safe trading, lock in your profits, make some money.